Hello, folks. It's 8:02 a.m. Chicago time on March the 2nd, 2020. Welcome to March. New month, new beginning here for the month. This is episode number 1703. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Very busy overnight session. The market remains quite volatile. The overnight session has covered whew, like 130 point range or something. It's pretty insane. Um, about 132 points, and the overall market stance is slightly to the risk allocation side, although we really have a mixed bag here. This is not a normal market environment. In fact, I was posting in the Convergent Chat Head Trader channel and warning members that we're in some pretty high risk territory, and it's a market that is very likely to wipe a lot of people out. There's a significant amount of risk that is in play here. It is important to stay engaged with the market, but not necessary to trade it. The rotations are very wide. I'll give you some statistics. Given 1 minute bars on a 9 bar fractal, meaning we're looking at the highest bar uh, in the last 4 bars and the next 4 bars to determine a peak of a rotation and a bottom. Over 5 sessions, over the last 5 sessions, the common rotation in the ES is 10 points up, 19 points down. That's most common. That's the mode of the rotations over the last 5 days. The one sigma rotation, meaning what is normal, or the value rotation, is 19 points up and 20 and a half points down. For the NASDAQ, the common rotation is about 35 points up, 46 points down. A normal rotation within the 5 session scope is 60 points up. That's one rotation on a 1 minute bar chart. 60 points up, 64 points down. And the volume is about 3 to 4 times normal. Okay, and this is a thin market, and it's still able to pull off volume that is 3 to 4 times normal. This is a big transformation here, big movement. The weekly range for the ES last week was 406.75 points, about 407 points in the RTH session. And that is about 8 times the norm. Okay, so just pay attention. It's really important to understand the extent of what we're trading, and that's where we stand. I'm going to try to move along here to keep this from being a 25-minute trader bite. They're supposed to be 15 minutes long. But crude oil is leading the pack today. Crude oil is finally taking a bounce, trading at 45.95, currently up $1.19 or 2.66%. Gold, which has fallen below 1600, is trading at 1596.3, up 1.89%. The Nasdaq's up 74.5 points. Remember, one rotation over the last 5 days in the Nasdaq was what could be as wide as 60 points on a 1 minute chart. So Nasdaq being up 78 points, that could disappear within a couple of minutes. Nasdaq's up 0.92%. The euro's up, trading at about $1.11 against the dollar. The S&P's up 21 points. 21 points again is almost one down rotation on a 1 minute chart, and so on and so forth. Just to give you an idea, take a look at my CT bookmap screen here to look at how this thing's been moving The rotations have been quite incredible, and it's just very, very, very algorithmic. The current trade is very, very algorithmic. We just moved from 29.28 to 29.78 in about 20 minutes or so. A pretty big rotation. It's blowing right through. It's still trading. The order flow and the price action is still trading somewhat in a manageable way, but with very, very wide stops and much, much faster. So, if there are issues with discipline or anything like that, they're going to be very much felt in this environment. So, this is what we've got this morning in terms of what the action is showing. So, with that, looking at what's ahead on the calendar today, we got some numbers out of Italy, nothing major. We do get ISM manufacturing today. We get market manufacturing. Market manufacturing PMI final comes out at 15 minutes after the open. ISM manufacturing comes out a half hour after the open at 10 Eastern. Construction spending as well. And then this evening, the Reserve Bank of Australia announces its interest rate decision. There is talk out there of a coordinated, strong potential for a coordinated central bank effort to push back on this coronavirus issue. And many macro-based traders or managers have been warning about the potential that if the market turns down, it could be pretty violent. And we're seeing just that. So cooler heads will prevail at this point. And there's a lot to pay attention to when, in terms of what's being said and the news on this virus. Again, the news kind of pushing things. I know many people will say don't pay attention to the news, which is true when you're trading in a systematic way on a higher time frame. It doesn't really matter, but for us day traders, the news creates opportunities, provides opportunities, and also moves the market in a violent way, like we're seeing here. We had it with the trade deal, we had it with the North Korean nuclear whatever drama, and now with coronavirus. So paying very close attention to news. So that's what's on the calendar. I'm not going to do a review today because, again, this is not the kind of environment where I'm going to sit here and talk about scenarios and discuss how the scenarios played out and why I was wrong and why things worked out. Here's the overall picture, though. This is my composite chart for the ES. The composite chart is a daily chart, RTH only, and it basically shows what the market has done and gives us a bit of a bigger picture. Look at the spike in range here and spike in volume based on the last few sessions of last week. The market has pushed down to the 50% swing from way back here, the December 2018 low. That was a very, very interesting month. We've pulled down into the 50% pullback, which was at 28.74. So on a price adjusted basis, continuous contract price adjusted basis, and took a nice bounce on Friday, pretty strong close. The expectation on Friday is that we are likely to keep creeping up and move to 3,000. Where we actually have a pretty big MC point of control right here in this balance zone. This is a pretty big area to test, and that's where we stand today. We still have a gap up. Here's Friday's close. I've shrunk it quite a bit, but this is 150 points of range, 130 points of range on Friday. Quite a wide range. And we closed pretty strong. So the overnight session was expected to continue higher, and it did. It went to 30.21. So we pushed through that millennial figure in the ES. So that's where we stand this morning. The overnight session. Oops. The overnight session. Here we go. So the overnight reopens on a gap down, fills back in, and then Europe opens back up, and the DAX took a heck of a pounding this morning. It opened in a gap up, filled the gap, traded through Friday's range, and has taken a bit of a bounce. But the Europeans came in and they just pounded on this market, taking the S&Ps down with them. And so what we end up with in the overnight session is a triple distribution profile on very high volume. Again, remember, normal volume or common volume for this product has risen to 150,000 contracts in the Globex session, and it's currently at 1.04. So again, about seven times the norm. Triple distribution profile. We have VWAP mid right in the middle here, and the market is holding steady against the overnight point of control. So all in all, let me just double check something here. All in all, it's looking like a very active price discovery overnight with some balancing areas. You know, we see areas where the market actually achieved balance on a high volume in these regions. So we have three distinct areas: 3,000, 3,000, 2968-ish, 67-ish, which is where we are now, and then below at 2920 or so. Okay, so that's where we stand in the overnight. I showed you the order flow. It is, again, pretty active, pretty busy, seeing some pretty big prints, a lot of volume. There's not much I can say to make sense of the action. I mean, the market is very, very, very engaged, and we see higher time frames in play here. And so I've cut back on my stock zones quite a bit, even though it shows a lot of, if we look at the stock zone areas, it does show some pretty, quite a few levels here, but those have been cut down quite a bit actually. I'm looking at a much higher time frame in order to determine what areas the market might show respect to, but frankly, who am I, right? I don't expect the market to respect anything I'm doing because it is trading in a panicky way. And we know that the higher time frames in control because it does not care about the short or the intermediate time frame. And so overall, I'm just keeping things nice and wide, and allowing the rotations to kind of play out. Remember, 15 to 19 point rotations are normal, which means that you and I, as day traders, assuming a 1 minute time frame, which is the smallest I look at, you and I as traders have to keep our stops around 19 and a half, 20 points wide, 20 points wide, and go for 19 to 18 and a half point scale outs for risk, and then trade structure with a second target, and then a runner does what it does. And so very, very big, very big ranges. And so my recommendation to everyone is to chill. Just chill out. This is an incredibly powerful drug for those who have issues with FOMO or issues with emotional trading. This stuff is like, this stuff is like a mosquitoes to one of those little blue light things. It's just you can't avoid flying into it and getting yourself burned. So just be careful today. I'm not going to add to this. I don't have anything technical to go over here. to go over here. It's really, I'm going to keep it nice and simple. There's not no magic here. This is all, if you are trading small, hopefully you have a big enough account. If you are trading small, it's really price action trading. You're looking for where's the burst, where's the impulse, and then trade the pullback of the impulse with a very clearly defined stop, and then look for the continuation. Again, purely price action based trading for day traders currently. Okay. Good luck. I'm sorry I don't have anything more enlightening, but these are highly unusual markets, and I recommend that most traders stand down and but remain engaged in that you're watching how the auction is proceeding. Even at high speed, the auction is active. The auction is valid. It tells us something when the market's just ripping through these levels. Friday's session was quite balanced and showed pretty good promise for buyers that the bottom may have been put in. We have a low that was steady, stable, and the market broke the IB high and then extended into the close. So Friday showed a little bit of stability. I'm kind of off of shorts, aggressive shorts, and I'm going to hold back. I'm going to hold back and see what it does before deciding which side is likely to be dominant. There will be no scenarios or anything like that because I'll just be wasting your time. Good luck, and I'll catch you tomorrow morning. Take care.